Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. Well, it is Friday, and the market is, it's kind of going sideways. The Friday jobs report came out, and they were actually stronger than expected, so that's very good. The only problem with that, of course, is that that means that inflation probably will continue higher because basically, if the jobs reports are stronger, that means that more people are spending, and if more people are spending, there's going to be more inflation. Well, that's kind of you get the grift. So that may mean another rate hike, probably will, but we even though that's good, and the GDP is forecasted to decline basically by 1.2% to this year, which would make it back to back and would indicate a recession. So who knows? But the jobs report was more successful than expected. So kind of what I'm expecting here is further tightening on the Fed. I think the Fed is going to raise the interest rates a little bit more, and of course that will probably hurt some of the markets. Cars right now, lot of difficulty there. Not only do they not have cars to sell, but the interest rates are going up. So kind of the double whammy there on that. On real estate, we're starting to see more listings out there, mainly because of the financing situation. The interest rates have gone up, and of course the long 30-year mortgages are getting more expensive. So that's something to consider as well. Just wanted to run down the various indexes here. The Dow Jones off just slightly. I mean, very, very slightly. 0.14% down at the end of the day. S&P 500 basically even, 0.06 down. Not much at all. NASDAQ was up, though, and the Russell was down. So pretty much a mixed day. A little bit of love on the NASDAQ, and the other indexes not quite as strong. So kind of a sideways market, very, very tough to trade. I basically did do a little bit of a nibble on two stocks. McKesson, that was up pretty nicely today, $9.95. Basically, almost a 3.10% increase in terms of the percentage change. I'm also in EVH, which is kind of strange. It says that it's Inviolate Health, but it is more than that. It's kind of an electronics company. It's really what it is, but it's in the healthcare field, so that is good. Very, very small positions in each, both just a half a position, and that kind of shows you kind of the makeup of the small portfolio here. For the small portfolio, we're basically in cash. I'm just waiting for opportunities. That's really the main thing here. Waiting for opportunities to look into it. Yesterday, my entry on EVH, not that great. I'm down a little bit, $24.90 overall, and then that's on the whole shebang. And then I'm up a little bit on McKesson. So McKesson is looking pretty good. Just wanted to show you that chart. Of course, the symbol on that one is MCK. This is the largest drug distributor in the world. Actually, they were a California company. I was very familiar with them when I lived there. And they have moved their headquarters to Irving, Texas, which is right around the corner from me. So kind of interesting there on that. Let's take a look at their chart just so we can kind of get an idea of sort of what's going on here. We're in this consolidation, and I bought right as we started to make this move towards the top of the consolidation. The top of the consolidation, 339.94. Set my stop loss very tight here. The stop loss on this one is basically right here at 31.95. Very, very close, just basically right at that undercut there. That's where the stop loss is set on this one. Who knows what's going to happen on this one, but it does look pretty strong. The group in general, this medical wholesale drug, is 13 out of 197. So this group is getting love. I mean, basically, the top groups, still coal is number one, and oil and gas, but they seem to be backing off a little bit. The medical seems to be where a lot of the action is right now. So that's one that I did buy. On the technicals, on the pattern rec for McKesson, we are basically 3% below that pivot, so that's not a bad place to buy it. On a flat base, basically a flat base is pretty much the normal consolidation. We pulled back to the 50-day line, and so that hopefully will be a good place to enter that. Also, I did yesterday take a half position in EVH. Again, I'm being very, very cautious here. This is a tough market to trade. This one is in the buy zone still at 33.90, 33.47, just barely. The pivot on this one, 33.14. So very, very close to the pivot here on this one. Let's pivot, of course, is this line here, this dotted line, as you can see. Let's see if we can show you that. This is the pivot here, and I'm just barely above it. I'm in the buy zone. The buy zone, of course, is just 5%. It just goes from here to here. And then once it goes over 35, then you probably would not be a good place to buy it. This is a cup with handle formation. Again, this is a little bit more speculative than McKesson, but it's in the computer software medical group, which is interesting, 48 out of 197. So not in the software group, but in the computer software medical group, and that one tends to have a little bit more strength. But McKesson definitely is the strongest of the bunch there. So kind of looking at it that way. Wanted to kind of give you a warning, and this is on Coinbase. Goldman Sachs issued a warning on Coinbase, and basically what they are saying is that they moved it to a sell rating, and part of the reason is that the continuing weakness in the crypto market. So here's the thing: if you have money in a crypto exchange, consider possibly withdrawing it into cash, waiting for a better time, not necessarily because of crypto so much, but many of these exchanges are weak financially, and they could not allow a withdrawal. Voyager, which was one of the crypto lenders, they did go bankrupt yesterday. On Wednesday. So be careful about that. Crypto, is still, it's holding on. It's above 20,000 on Bitcoin, but it potentially could go lower. So Goldman Sachs is predicting a 80% with drawdown on Coin, which of course is the world's largest crypto exchange. So right now Coin is selling for $60.15. So potentially we could be down all the way, down to about $16 on Coin. So this one might be a good short. I'm evaluating it now for a short. I'm not short this one, but there has been, today there was a dead cat bounce on it. It did move up, but after hours it's pulled back. So my guess is it's going to be, it's probably going to have some short squeezes here. We did move up here. This was the short squeeze that we saw on Coin, and basically what happened was this was a cover. People were covering their short positions, then it pulled down. So again, not the easiest thing to short in terms of this is the intraday chart, and I just wanted to show you the short cover on it. We were back down here basically at the beginning of the day, and then it rocketed up. This basically is not people buying for investment. This is to cover a short. So that's what's going on here. It did move up very rapidly, but then once everybody was taken out in terms of their positions and their covers, then it started to move down. Goldman Sachs is indicating a potential 80% drop in this, and that could make this coin, COIN, move down as low as potentially around $16. So I think you have to be very careful regarding this. And also with your Bitcoin investments, if you are in an exchange, really kind of recommend possibly moving out of that. This is another kind of a chart on Coin, kind of gives you an idea of just how low it's gone. It's gone under the 200-day line, under the 50-day line, and it has a relative strength rating of 1. That's the worst that you can get. So be careful if you are in coin. I don't think probably very many people are in coin right now, but if you are, be very, very careful because it does have a lot of weakness, and Coleman is looking at it as a potential to lose 80% of its value. So something that is not necessarily the greatest thing. All right, let's get into some questions. Thank you so very much. I think the first question came in with, hey, happy Friday to everybody. With Funco, Funco, this is from Matt. Thank you, Matt. I love your questions. Funco has been doing well. It's people may not be spending on the big ticket items, but toys, nobody is going to deny their kids in a recessionary period. So this is not necessarily a bad area to be in. Symbol on this one is FNKO. I always misspell it. There we go, Funco. And let's see if we can put that chart up there. Okay, this is the Funco chart. Great thing going here. This is a very nice cup action. We did have a pullback, not quite a handle. It is above the buy point. The buy point on this one, right here at about 25. Currently, it is Funco is selling after hours for 25.33. Is this a buy? Boy, that's a good question. We've got a lot of buying coming in here, as you can see on this volume chart down here. A lot of buying coming in. It's got a 98 relative strength. That's very strong. And the checklist is 100%. So that is looking pretty darn good in terms of everything. Let's compare this Funco with an investment that I just made, and that, of course, is in McKesson. I know this is not a normal thing that we would do here, but let's go with Funco. That's the Funco chart, and that definitely look at this. From May up here to August, it's looking pretty darn good. And if we were to add, let's say, McKesson, MCK, let's take a look at that to see how that one's doing. So a little bit better on McKesson, but Funco is definitely a winner if we're looking from the May timeframe. That's kind of what I was looking at here. So if we're looking from basically May, June, July, we can see that Funco is definitely an upward trend. We definitely like seeing that. McKesson's doing a little bit better, so I'm probably leaning a little bit towards McKesson right now. If you had to choose, of course, you don't necessarily have to choose, but Funco looks good. It's the area of the market, leisure, toys, games, and hobby, 41 out of 197. So that's looking pretty decent. So could you possibly do something with Funco? Well, let's take a look. I want to kind of look at the checklist. That checklist is excellent, by the way. My only drawback on this one is the number of funds in it. It's still pretty light at 279 here, but looking good. Unfortunately, none of the really followed the high-end funds are in it, but looking pretty good. On the technicals, we are, a little bit, we are a little bit extended off of the 10-day line. We're 5% above that, so we're definitely right in a place that you could buy it. But here's the thing: if you do buy it at this level, it is a little bit risky, especially in this market. Now, here's what you kind of want to do. Even though it's moved past the buy point here at 25, it's still a little bit extended off of that 10-day line. What I would do here is I would kind of wait to see if it pulled back to either the 10-day or the 21-day line. The 21-day line currently is at about 22.88. Now, I don't know if that'll happen, but I kind of do expect that we're going to see a little bit of weakness because this is not a very long handle. We'll see it pull back. If it's closer to that 10-day or the 20 to 21-day line, that's where I would buy it. But this is definitely a buyable stock, and it looks very good. And so, far be it for me to say that. So Funco, FNKO, is buyable. And I'm told that, and I don't really watch Stranger Things, but they have some kind of deal with Stranger Things. A lot of people really like that. And so I do think that Funko is viable. And but here's the thing: I would wait, kind of tactically. I would set a limit order to buy them basically at the 10-day line, which is about 24. So here's what I would do. I would I think Funko is viable. I would set limit order at 24, and that is if there's a pullback on it, then we can get it right about at the 10-day line. I think that's a pretty good place to get it. That would be right here. That would be right here as we can see it. That would be about the 10-day line. I do think it's going to pull back a little bit below the pivot, but it's looking very, very good overall. So thank you so much for that. Thank you for that so much. All right, let's take another question. All right, Chewy. Chewy. Chewy is, I don't know about Chewy. I am in many days past, I was in Silicon Valley, and I was working with a startup company, and it was not pets.com, but we used a lot of the same programmers as pets.com, and I remember that very, very well. Chewy is kind of a rehashed pets.com, for that kind of set. This one is not, even though it has started to turn up and it's still below that 200-day line. I just, maybe you could buy it off the bottom here. There was some nice volume that came in here, but I would be really, really careful about buying at this level. This isn't really a good place to buy it, in my opinion. The checklist is fairly weak. It's 44%. I think I would pass on this one just because, I just think that it's just not. I just don't think it's looking as good. I think Funko is better if you're interested in that. So I would say pass on Chewy. CHUY. So I would pass on it just because I don't think I don't think CHWY. That's why. Yeah, there we go. Okay, I had it right. CHWY. So I would pass on Chewy, and the reason I would pass on Chewy is it doesn't really have a good formation. The checklist is weak, and it just isn't looking good. It's also below the 200-day line, so just not something that I would be that interested in going with. Let's take a look at TikTok. Thank you so very much. NYSE MCG. Okay, so hey, thank you, Batch. Let's see about this. Let's see if we have anything. Nice portrait. Thank you very much. That's Chartman, by the way. Thank you very much on that. All right. By the way, if you want to see this live, if you want to see all the charts that I'm showing, super duper easy. Just go to the profile. There we go. Just go to the profile and click on the link that says Beacons, and you'll see a live version of, you'll see the live version of this on YouTube, and also we're on LinkedIn Live as well. So that's pretty cool as well. All right. Let's look at I have to give somebody else a chance. I really like your comments, Charles, but I got to get to other people. I could just you have some great stuff. Okay, all right, Samuel. Twitter is down. DWAC is down. Elon is not buying either. Boy, that is true. Let's look at Twitter. TWTR. The problem with Twitter, of course, is that I'm not convinced that they really have a business model. I think it's just basically, they annoy people. I think that's basically their business model. So this is Twitter, and as you can see, it's trading below that 200-day line. It's trading below the 50-day line, trading below the 21-day line, trading below the 10-day line. So that's not really looking good. It's stacked, but it's stacked in the wrong way. Now, when you're looking at stocks and you're looking at them, you want to have the line stacked. Now, this is just backwards of the way you want it. You want to have the 200-day line on the bottom, the 50-day, then the 21-day, and then the 10-day. But this is totally backwards. 200 200-day line on the top, 50-day below that, 21-day and 10. So this is absolutely stacked the wrong way. So not a good sign here. We also have a relative strength line that is moving down. It's 26. That means that 74% of all of the shares in the market are doing better than Twitter. So this is not really looking that good. I can see kind of why I wouldn't buy this thing. But then again, Elon Musk has a lot of money and I don't. So I think it's better that you listen to him, not me, because he's much richer than I am. But here's the thing. I don't think this is a good buy for Elon or for me or for you, for that matter. The checklist is looking pretty bad, 56%. So I'm not really liking that at all. So there you go. There you go. I wouldn't buy Tesla at this juncture either. Yeah, it just doesn't look right to me. So let's take a look at Tesla. We were talking a lot about Elon, so let's look at Tesla. TSLA. It's been making a move, and it is actually, you could potentially call this actionable. I'm not now. For full disclosure here, I did do very well on this stock in 2021 and 2020. I did very well on it. It bought me a house. So I like Elon Musk. I like this stock. I just don't own it right now. Can it do better? Well, I tell you what, I just don't want to buy it. Now, it's true. This is a very tough market. The market is in retreat. But this Tesla right now just has some bad juju on it. And one of the things that's bad on it is that it has the death cross on it. What does that mean? Well, that means that the 50-day line has dropped below the 200-day line. Now, even though the 200-day line is moving upwards barely, which is a good sign, this indicates weakness. And again, it has that weakness. It went down, and then it's moved up, and then down, and then moved up, and then down, and then it's moved up. My guess is the next leg is down. That's my guess. Why? Until it can move above the 200-day moving average decisively, I really don't think that it is buyable. Now, currently, it's the 200-day line is sitting right about at 900. Now, interestingly enough, that 900, if you look over here. I gotta draw a line there. That 900 was a former pivot. You see, so now it's underperforming. So why do I say that, Tesla right now is having difficulty? Well, I'll tell you why. People bought above this line, above this pivot, this $900 level. This is what they call overhead supply. All right? So what happened is all these people bought here. Now, a lot of these people didn't sell. Now, when it declined, they were like panicking, and then it turned at 620. That was good. And then it bounced up to the 21-day line. Look at that, came right down, bounced to the 21-day line, came right down, and now it's exceeded the 21-day line. But the problem here is every time it gets going up here, people that bought it up here, they're like, well, let's throw in the towel and sell. So it has a lot of trouble in the upward movement. Now, I think that Tesla needs to base once again, and that could be as much as 6 months or a year. So right now, I'd be really careful about buying Tesla just because of this situation. I like Tesla as a company, and I'm not ragging on Elon Musk like a lot of people are. But here's the problem with Tesla. Tesla has a lot of overhead supply. I think it's going to stay under 900 for a while. Why? Because that's the level of the overhead supply. That's the last pivot I see on Tesla. So right now, I'd be very careful about buying Tesla. I'm not a buyer. I'm not an owner of Tesla. So I think that probably a good idea to stay out of that, to stay out of Tesla, at least for right now. I'm not saying it forever, but at least for right now. By the way, if you're down more than 7% on Tesla, do consider selling it, because you don't want to lose it's better to sell when you have a loss of 7% than to hold on. That's the way. So remember, never let a stock move against you more than about 7% from your buy price. And believe me, I have made this mistake so many times. I am not being holier than thou here, but if a stock moves against you about 7%, sell it, wait for a better opportunity to enter it. So you won't lose your grub stake. That's really, really important in this market. Very tough market to trade right now. But you just want to keep in cash. Now, mostly, as you know, I'm mostly in cash here, and I want to show you the makeup of the small portfolio. Right now, this is how I'm allocating my investments. Currently, I have two half positions, and then the rest is cash. Now, what is a position? A position is 1/8 basically of this pizza. Think of your account as a pizza, and think of it in 8 slices. One slice is one position. I have two half positions right now. So I have basically that's all I've got in the market. I'm waiting for the market to draw me in. Right now we're in an overall downtrend, and the best sector of the market currently, believe it or not, is medical. So that's where I'm at. Not an easy market to trade. Let's take a look from Brian. Thank you so much. Was looking at KSS the other day. It had a failed buyout valued at $60 a share. Any thoughts? Interesting. Thank you for that, Brian. Of course, this is Kohl's. Now, there is one thing that is looking kind of good in the retail area, and that is Ollie's Bargain Outlet. And I want to show you that chart in just a second. KSS, of course, is Kohl's, and Kohl's is one of the biggest of all of the retailers. Here's the problem with the retailers that I see. We are essentially in a recession. Now, the government is trying to go hem and haw and say, no, we're not in a recession, but I think we really are. And the problem with the recession, of course, is that people cut back on their spending. And where they cut back on their spending mostly is in things that the department store sells. I mean, they sell more high-end stuff. So that's where we've got to be careful. This is the reason I think Kohl's is a little bit is a little bit in a little bit of a bad situation. I did make some money on Kohl's, but it was back in the November timeframe. As you can see, I bought my positions in Kohl's. I did sell out of it as it retreated, but we have essentially this is what they call, some people call this a bear flag. I don't know if you could totally say that, but we had this drop, sort of a flag. It goes like this. There we go. So it kind of goes like this. Not a good thing. Relative strength on this is 12. And if we look at the relative strength line, it's hard to see because it's sort of interspersed with the actual price action here. But this is the blue line, and it is headed down. So this is not something we want to buy. We always want to see the relative strength line moving in an upward direction. We want to see the stock gaining strength against the overall market. The overall market, represented by this black line, this is the S&P 500, is also retreating, but unfortunately, this line, the relative strength line on Kohl's, is retreating faster. So people are selling this. Institutions are selling this right now. I think that I don't think anybody's going to buy this for $60 a share. I certainly wouldn't. I certainly wouldn't buy this for $60 a share. So I don't think this is going to have a buyout. I think that it's just maneuvering. If you want to get into the retail sector, and I don't really recommend it right now because it's not one of the better performing areas. The retail department store area is 108 out of 197. So it's in the bottom third of all of the stocks. So I don't really want to be in the sector. But let's look at one that we might want to look at if we're looking at retail, and that's Ollie's, O-L-L-I. It's Ollie's Bargain Outlet, and that's one that is doing well. Now, why would Ollie's be doing well? Well, the reason Ollie's is doing well is because Kohl's is doing so poorly. What Ollie's does is it buys the stale merchandise from companies like Kohl's that can't sell them, and then sells them in their bargain stores. And they are expanding. Now, in retail stocks tend to go up as a company opens more stores. Ollie's has a good program, and they are opening more stores. Now, would I recommend them? Well, it is extended right now. The stock is extended. The time, of course, to have bought it would have been back here when it moved above this pivot. Oops. And that was right at about 55. That was right at about 55. It's since then moved up and it's extended right now. So I wouldn't buy Ollie's right now, but it is a good stock in the retail area. Here's the thing, Ollie's is the kind of stock that you want to look at in terms of that, but it is extended. So even though I'm recommending the stock, Ollie's LLI is extended. So I wouldn't be a buy. So no buy at this level. It's just it's tough because once you discover that the stocks are doing well, a lot of times they're a no buy, and this is definitely a no buy. But this is in the now look at this as very interesting. In the department store section, that was way down in the bottom third. But look at retail discount and variety, 14 out of 197. So this area of the market, what's happening is the buyers indicating that we're looking at going to a lower a lower type of store. That's what it's looking like, and this is definitely true with Ollie's. So it's retail itself is not a bad category, but we need to be on the discount retailers much more than on the other ones. They just don't quite work as well. Let's see if we can see the overall for this. Let's see if I can see. Yeah, so this is the overall for the discount and variety. It's starting to make its move above the 200-day line. The kind of stores that we're looking at here are BJ's, Dollar Tree, Grocery Outlet, Dollar General, and Ollie's. These are all quite good here. They all have strong. They all are strong, and have some potential. Now, one I do like is Grocery Outlet. It's GQ. Let's look at this one. I do like this one a lot because of the overall condition in the economy. One of the things I'm always looking at here is the relative strength line. We have a very strong relative strength line with Grocery Outlet, and it's going to a new high. It's 99. It's in the top 1% of all stocks. Now, can we buy it here? Tough place to buy it because it is extended. The last buy point was down here at about 29.28, and it's moved above that. So this is the kind of stocks that you should be looking for. This one is going to do well in a recession, and I do think we're going into a recession. Grocery Outlet is the name, even though I wouldn't be a buyer here just because it's extended. But this is something, if it does base, and I don't know if it will, but if it does, that's something to look at. It's got a relatively good checklist, 67%, so looking pretty good there. All right, let's go to the next question. Thank you for holding on here. All right, and this is bottom fishing. I don't like bottom fishing that much. The only reason I don't like bottom fishing, I'm not trying to be. I've gotten burned so many times on bottom fishing. I thought, oh well, I know where this thing's going to bottom, and I was wrong. So it's very hard to pick the bottoms, and it's very hard to pick the tops. So what I like to do is I like to find the trend, and if the trend is right, that's when I'm going to buy. So I like to buy stocks that are in the top 5% of all the sectors of the economy. That's very key. We always want to be buying the best that we can in an uptrend. That's sort of where I like to be. This is a list of all of the sectors of the stock market. Now, currently, the number one area, oil and gas royalty trust, energy coal, energy solar. By the way, there's a good stock in there potentially. I'm not in any of the solar stocks, but there is an ETF, the symbol of TAN, T-A-N, that might be of interest. Oil and gas, oil and gas, oil and gas. Look at all this, oil and gas. Now, insurance is coming in here. Now, property casualty insurance, not a particularly exciting area of the market. This is very, very defensive. Canadian oil and gas. Then we start to have medical managed care and medical wholesale. Now, I did purchase a stock, McKesson, which is in the wholesale group. Now, right below that, we have retail, discount, and variety. That's why I'm interested in Ollie's, because it's in there. But other than that, I'm just going to wait until I get something that's good. If I'm going to go for the market, I'm going to go for areas that are going to that are going to be in a better uptrend in a stronger area. That's what I'm going to do. But I'm not really a bottom fisher. That is absolutely true. Sometimes I get confused. I'm not a bottom fisher. All right, so let's talk. Oh, let's go for Mr. G. Thank you for GFS. Let's see if we can get anything there for GFS. And this is Global Foundries. This is another company that I like a lot. I like the long term. I like the long term prospects of Global Foundries, and the reason I like them is because I do believe with the tensions in Asia, especially with China and Taiwan, that we're going to see a lot of the chip production move from Taiwan and Asia back to the U.S. and GFS is in the forefront of this. So this is potentially a very good company. Now, would I buy it right here? Probably not. And the reason again is that relative strength line. I just don't like a declining relative strength line, and that's what we've got here with this. Now, it has been on the upmend. It has turned and is moving up, and it has touched the 21-day line. But I am not convinced that this is a reversal yet. Now, I would consider buying it if it reversed above the reversal line. Now, what do I mean by that? You'll notice this is the high, this is the intermediate high. So right here is where we might see. Let's see if I can set the alert on it. There we go. So this is the reversal line that I'm going to put in here. So I'm going to take this one out. Yeah. Okay. So this is the reversal line. I might consider buying GFS if it moves above this line. Now this shows that it'll move from currently it's in a downward trend, and if it moved above this line, it would be considered an upward trend. So I want to make sure that it's an upward trend, even though we'd had a bounce here, it's still in a downward trend. So right now for GFS, even though I do like it, I do like it a lot. I would have to say, for GFS, I would watch list for now. I do like the company and I do like where they're going, but I just don't want to buy it in a downtrend. That's the only thing that I'm saying here. Don't want to buy this in a downtrend, but it is looking good otherwise then. So I would watch list this one, wait to see if it gets stronger, and then if it does, then you might go on to possibly take a throw at it. But right now, unfortunately, not so much. All right, Jay again. Oh, Elon is not buying Twitter. Should we short Tesla? That's not a bad idea. Well, let's look at Apple first, because Apple is the ultimate bellwether in terms of the NASDAQ stocks. It has been turning up as of late, so that is indeed a good, that is indeed a good thing here. Apple has been kind of trending up in the last little bit, and look, the relative strength line is moving up too, so that's good. So it's getting stronger. It's definitely moving above that 200-day line. It's still, to me, I just want to see some more strength here. I'd kind of like to see it move a little bit stronger than it is. There has been some good volume here, but not anything super duper, because this is a logarithmic chart, and if it moves above that red line, that means that there's tremendous buying. The buying is good, but it's not tremendous. So here's the thing. I do think that this remains a very safe call. I think that their profits will be good. Do I want to buy it here? Well, let's see if it can move above this 50-day line. I still think that there's weakness until we get to about 151 here. I still think that there's weakness, if you can see, because this is the last intermediate high on this reversal line. So it is moved past the reversal line. That's one good thing. Good thing is that this is the reversal line. It has moved above the reversal line. That is good. It has moved above the 50-day average, but I kind of want to see some more strength before I would be interested in buying Apple. So, but right now, for me, anyways, I just have to say that Apple's a watch list. So I can't really endorse buying it here. I would say it's a watch list on this one. So great stock, just not the right time for it. Okay, we've got down to the last few ones here. Let's take a look at CHPT. All right. Let's take a look here. ChargePoint. I wish I could get more excited about ChargePoint. I did have Blink, about a year ago. If you've been watching me for a while, I did pretty well in Blink charging. I got stopped out, and I haven't been back. ChargePoint, of course, is the biggest of the biggest of the of the other charging location companies. Now, here's one thing that you got to consider. Elon Musk indicated that he may allow non-Teslas to use the Tesla charging stations. I don't know. I think that the reason he's doing this is because the government is suing him. Obviously, this is, they're in bed with GM and Ford. And, of course, they don't have any charging stations. They don't have any vehicles. But, they've got a lot of lobbyists up on Capitol Hill. And so I don't know. I mean, I think that ChargePoint will eventually be an acquisition by somebody, but I just can't see it right now. I just can't see it right now. Let's take a look. For fun, let's take a look at charge. Let's see if I can get ChargePoint here on the list. Okay, so this is. Let me just see if I can if I can put ChargePoint against Blink charging, just to see if this is going to be for just would be just for the charging station companies. This is ChargePoint. Let's look at Blink, BLNK. I don't think they're doing as well, but let's see if that works. Oops. Yeah, Blink charging. There we go. So this is almost the same. Look at that. Very interesting. Blink charging actually doing a little bit, tad better than ChargePoint, but the overall trend on this thing, not what we want to see. It's a downward trend. Not. I don't think this is going to be a great investment. So I would be Lewis on this one. I would just say no. I would say no on ChargePoint. I don't think it's going to work. So I would say no on ChargePoint. So it has a good idea, but I don't think that it's I just don't think it's going to be the kind of thing that you want to see. So I would say no on this one, at least for right now. So I don't even think you need to watch this one because I don't think it's going to do all that well. All right, what about EVgo? Okay, let's look at EVgo too, kind of on these ones. Oh, that's a good one. Thank you for that. EVGO. There we go. Yeah, that's interesting. Wow, that's very, very interesting. So let's look at the three charging companies out there and see if we can kind of do them all at the same time. There we go. All right. So here we go. ChargePoint is the one in black. Then you've got Blink charging. That's the green one. And then EVgo is the blue, kind of the teal color. Yeah, that's kind of what it is. Also, not kind of what we want to see. Overall trend down. Ouch. Not what we want to see. So, not the thing. Not where we want to be right now. Not where we want to be. So, one of the problems is this energy alternative space. It's 47 out of 197. So it's not a particularly good space in terms of the market. So the charging, I think the charging points are going to be good eventually, but I think you're going to see, a lot of government investment probably, and obviously GM doesn't have the charging points, and they're the biggest outside of, they only made 36 vehicles last year. It's just pathetic, and of course. The one to watch, of course, is Tesla. I want to put Tesla in there for fun. a thing. So, if we were to look at all of these together, and I don't know if you can see this. I've got to get this so it has a little bit more. You can see this better. But Tesla, if you invested in all three of these basically a year ago, your investment in Tesla actually would have declined the least. They're all down over the year, and that's what's sad. Tesla is doing the best, of course. EVgo, ChargePoint, and Blink Charging. So they're all these investments are down. Not what you want to see. Not what you want to see. Now, if we are looking, this is one of the reasons why I always like to invest in things that have potentially the best outlook. So let's just look at some investments for the first 6 months. Let's look at XLE, which is the oops. All right. Okay, so see if I can. Let me just do this again. So let's look at some investments from the beginning of the year and compare them together. That's always a good idea. And all right. All right. So let's look at XOM. That's ExxonMobil. Let's look at and look at ChargePoint. Yeah. So this kind of gives you an idea of why I like to be in areas that are strong in the market. So I'm going to show you two potential investments here and kind of how they're doing. All right. So let's look at the beginning of the year. Let's look at ChargePoint. If you bought ChargePoint, you're going to be poorer, unfortunately. But if you bought ExxonMobil, you're going to be up because they started essentially back here, and that would be about 100. So if you bought ExxonMobil a year ago, you would be up about 40%. See, because that's 100 plus 40, 140. So that's about 40% increase. If you bought ChargePoint, you would have been down about 50%. That's why it's so important, and that's why I always try to be in the leading areas of the market because they tend to perform better. We don't want to be buying yesterday's stocks. We want to be buying today's stocks as much as possible. Now, just for fun, let's look at McKesson, and let's compare that as well. MCK. Oops. This is one I just bought. This is McKesson, and you can see this is why I'm interested in it. This is why I started buying it, because ExxonMobil was the leader up until about June. See that? And then they're about the same. And then in July, McKesson is doing better than ExxonMobil. That's why I bought McKesson, because its performance relative to ExxonMobil was better. And ExxonMobil in the first 4 months of the year was excellent. So that's part of the reason I bought McKesson. And as you can see, if you bought McKesson back here a year ago, you would be up 75%. Isn't that great? 75%. Now, of course, I'm not going to get all that 75% because I didn't buy it a year ago. But here's the thing. One thing's in the stock market, winners continue usually to win, and losers just don't do anything. So that's why I like to go to the winners. All right. Thank you so very much. I've run over time. I'll be back tomorrow not tomorrow. I'll be back on Monday with some more of these comparisons. I think it makes it's good to look at these comparisons to kind of see, are we betting on the right horses? Remember, even in this down market, there are winners, and right now, the area of the market that tends to be doing the best is this area of medical. Now, I'm not a fan of medical at all, but the numbers say that's where we should be right now. So I'll be back. By the way, if you haven't already signed up for Dallas Trading Floor, it's super easy. Just go to www.dallastradingfloor.com and you can sign up there. And it's free, by the way. And I will see you back here tomorrow on Monday at about 5 o'clock Central Time. I hope everyone is going to have a nice weekend. I'm going to try to have a nice weekend, try to go out and be up by the pool here. By the way, also, if you could, if you could, please, 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 please like the show. It really helps us. So if you like it and you subscribe, that would be wonderful. So please like the show. And also, of course, sign up for the Action Trade Alerts at www.dallastradingfloor.com. So until Monday, thanks everybody. See you back here. Happy trading.